Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Now on Friday we had the most highly anticipated US jobs report of the month, if not this year, which showed a strong reading of 943,000 new payroll numbers in July, which has now raised expectations that the Federal Reserve could make an announcement on the wind down of its program as soon as September. That data will also likely ramp up investor focus on the central bank symposium in Jackson Hole, Wyoming at the end of August. More big market moving events are expected as we go into next week amid growing inflationary pressures and a relentless global surge in coronavirus cases. Data on consumer and producer price inflation, that will be the big focus for markets next week. Traders will also be watching Federal Reserve speakers for clues on how close the central bank is to announcing plans to taper its massive quantitative easing program. Last month, the consumer price index, which is the Fed's other favorite measure of inflation, that jumped from 5% to 5.4% in June. That's the highest level since 2008. Whilst core CPI inflation, that rose from 3.8% to 4.5%, which is the sharpest increase in 3 decades. Many economists, they now forecast that inflation will climb to between 6% and 9% by year end. The question with rising inflation is whether it is temporary, as the Fed says, or a more persistent problem that will force the Federal Reserve to change its monetary policy stance much sooner than the market expects. Either way, this data will likely open the door to more volatility ahead. As we know, volatility creates opportunity. Banks and hedge funds, they're making multi-billions capitalizing on the week-to-week volatility, and it's not so different for the retail market. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, they've already made in excess of 6 and 7 figures in 2021, and we're only halfway through the year. In fact, Goldman Sachs has begun preparing their clients for what they predict could be one of the most profitable quarters ever seen. So if you've been kicking yourself for missing out on some of the massive opportunities we've seen so far this year, you still have time to make 2021 your best year yet. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. So firstly, let's actually move over to GDX, which is gold miners here, because this will give you some degree of correlation with the other metals, and it's very useful to look at as we go into a new week, given that we've created a big gap here on Friday. So first of all, GDX, which is gold miners, we've broken down to the 33 zone. You can see here where we have a very large gap to fill to the upside. GDX is typically very effective at filling these gaps. You see at the beginning of last week, we also had a gap higher, rolled over, came back down and completed that gap fill. Now, the reason I want to put this on your radar is given where the price sits at the moment with gold, with silver, with platinum and copper, where we've seen quite significant sell-offs after Friday's non-farm payroll data. So as I mentioned last week with you on gold, we banked with our clients at the Gold and Silver Club at 1,830 US dollars per ounce. This was for 2,200 points profit over 4 trades. So that was very effective for us at the Gold and Silver Club. We caught it within $1 of the high last week with our clients. So for every 1 lot contract that you would be trading, that's $22,000 of profit. For every 10 lot contract that you would be trading, that's $220,000 of profit. We mentioned to you previously buy zones at the 1790 to 1795 zone and also the 1800 zone. But again, the trick is, of course, to know when to bank your profits. As I say time and time again, be nimble in the markets, make sure that you bank into strength and also key areas of liquidity. So this actually puts us in a really good spot now as we go into next week. We have no fresh positions on here with gold. We've banked our profits last week. So we're essentially looking at opportunities to reload now on gold as we go into next week. I'll come back to that chart very shortly with you, but we'll also move it over to silver. So you've seen 3 days of consecutive pressure to the downside here with silver. We've seen the normal classic move, taking out the previous swing low there, and then we're at a point here of liquidity where I would expect silver to start to get a bounce as you go into next week. week. The gold-silver ratio is back at resistance. We've seen the dollar have the usual strong move in the first week of August. Now, something that I want to put on your radar, let's just go back to gold here. All you really need to do is go back and observe the price action that we've seen in previous years in August. So we'll go through a few years, right? So first of all, if we have a look at August of 2020, we saw the initial knee-jerk sell-off with gold in the first week, and then subsequently gold prices from the lows to the highs, they were able to rally 1,500 points after the first week of August sell-off. If you then take the price action back to 2019, you will see very similar again. The first week of August, we had a correction to the downside, and then gold subsequently was able to rally 1,500 points afterwards, after the initial takedown that we got at the beginning of August. We can see this again going back to 2018, where we had a sell-off into the middle of August, and then subsequently off the lows there, a rally of 500 points consolidated, and essentially gold prices, they ended up building up higher lows, higher highs, and continued to rally into the end of December and January. So essentially you can see the point here that typically you do get these takedowns at the beginning of August. This shakes out many traders in the market. They end up panic selling out their positions because they have FOMO'd into trades. It comes back to our point that many traders, they're taught delayed confirmation. So by the time they're all buying right at the high, we are banking our profits. It's very common for us to see at the Gold and Silver Club when we are collectively banking profits and coming out of trades, we are seeing other traders external to us starting to get their delayed confirmation, and this is where they're buying right into the top of the move just before we're about to see a big takedown. And that has been a great example there on Thursday through to Friday. So then going back to the example with silver here, so at these levels at $24.33 per ounce, yes, I do like silver here. I like it for a bounce as we go into next week. I like it for a reversal over the month of August. I would look at these zones back down towards $24 per ounce as a buying opportunity at the moment as we head into a new week. I'm also waiting on further opportunities to add to palladium. So we've got two positions running on this market which are up over 2,000 points in total, but it is a market that I've got on the radar as we go into next week to build into further positions. So that's certainly on the radar as well. Platinum, again, we've seen 4 days of consecutive pressure to the downside, an impulse move over Wednesday, Thursday and Friday, and we're very oversold, not only with respect to the platinum chart, but the platinum to gold ratio is also at the lowest it has been in over a year. So I would definitely have this market on the radar as we go into next week. It's very common to see the metals under pressure in the first week of August as you get dollar strength. I'll just show you the dollar, which rose over 0.5% on Friday. So with that dollar breakout to the upside, it puts pressure on the metals. But as I've mentioned time and time again, as long as you're nimble, banking into strength, it gives you the ability to then buy back in when you have these big corrections in the market, which then brings me back to gold. So gold right now is trading at $1,763 per ounce. We can see we're very close back down towards the swing lows that were tested at the end of June and the beginning of July. So for me right now, what would be the perfect setup would be if GDX was to come up and fill the gap, if the dollar started to roll over, if the gold silver ratio was under pressure, and then gold started to consolidate at these zones and then build up pressure. So the way I see it playing out is either we are going to get 3 days of consolidation down here back towards the recent swing lows, and then we start retracing later on in the week. So we may get 3 taps into this zone and then we get a bounce later in the week, or we're going to immediately see the price get a bid off the Sunday open and start to retrace higher. So that's what I'm looking at really as we go into next week for the metals, and we're looking certainly at some opportunities not only on gold, silver and platinum there, but also copper built into this position at the end of June, beginning of July, and we've continued to add on the recent sell-offs here as well. So I do like copper for this cycle and this time of year as well. You would have noted that crude oil had a significant sell-off over the last week. In fact, in terms of the weekly sell-off, it's the biggest weekly fall since June. But again, these sell-offs I would look at as a buy opportunity as we continue throughout the month of August. So with the big sell-off that we've seen to the downside, as long as you haven't FOMO'd in using outdated strategies and technical analysis, now that the dust is settling going to next week, it gives you a great opportunity to reassess and look for fresh opportunities to buy after this massive sell-off that we've seen over Wednesday Wednesday, Thursday, and Friday here. So that's really what I would look at as we go into next week. As you know, bull markets, they don't move up in a straight line, they zigzag, and that really presents savvy traders with a back-to-back flow of trading opportunities. Technical analysis, it does not work. We are in a highly data and event-driven trading landscape, and in these times of heightened volatility and rapidly surging inflation, the importance of having an essential income-generating skill like trading has become a must-have necessity. If 2020 has taught us anything, it's that you should never rely on just one income stream. Building multiple streams of income, it's no longer an option. It is a priority to make sure that you are inflation-proof and thrive and not just survive. The greater your data and intelligence, the greater your edge in really navigating these fast-moving markets with precision, accuracy, and the highest levels of profitability. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, you need to adapt your strategy to the current market conditions, and you need to trade like the hedge funds, the money managers, the institutions, utilizing a professional, research-driven approach. This is where you want to be utilizing data, market intelligence, statistics, the facts in the market. Alongside that, using the daily, the weekly, the monthly, the quarterly cycles, understanding capital flows, the intermarket correlations, the ratios in the market. Alongside that, be aware of sentiment, key areas of liquidity, and of course how the hedge funds, money managers, banks and institutions are positioned in the market. That will help you massively to get an edge. So with that, if you would like to join our community of successful traders, learn the research-driven approach to the market, and join our professional mentorship program, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to our real-time trade ideas, institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.